But I think the work-life balance in the secondary market, largely speaking, is not too bad. And about 7:40 every morning, we have a morning meeting. There are two major trends that I've noticed that are making it, I think people should think carefully. The first major trend is that over time, headcount is coming down. And a lot of this is due to automation. I wanted to kind of, explore the world and, go live and work in a different place. You can speak the same language as the people in that segment of the market.
Hello, everyone. Welcome back to my podcast. It's Charlene here. And today we have a really special guest, Cheung. He has over 10 years of experience in investment banking, and he's currently a research analyst at a large American bank. And before this, he worked at Morgan Stanley, and his expertise lies in fixed income, foreign exchange, FX, and monetary policy. Hello, Chun. How are you?
Good. Hello, Charlene. How are you?
Yeah, I'm doing really well. Thank you. Yeah, let's just probably go straight to the questions. Can you tell us a bit more about your role as a research analyst at IB at an investment bank? I think people usually link investment banking with really endless stress and endless work. So, what does your typical day look like?
Yeah, sure. Before we start, I'll just say, disclaimer: everything I say here is purely for educational purpose. Does not represent any views of firms I have previously worked for or
Mhm.
currently work for. Just purely my own opinion, and I want to share my journey, and to the
Of
extent my
course.
advice that can help those that might be interested in the type of work I'm currently doing. So, as to your question, my typical day, so I work in the secondary part of the market. So, if we think about finance broadly speaking, there's the primary market where the typical investment bankers they would try to bring securities that are not currently in existence, right? Like so, firms that are privately traded that are not publicly traded, and they would try to bring them to the market to be publicly traded. So, those are what we call primary market activities. The part of the
Mhm.
market I work for is in the secondary market. So secondary market means you're trading instruments that, largely speaking, already exist. So that could be bonds, that could be equity, that could be like currencies, commodities. But whatever they are, they're already something that already exists. And largely speaking, you don't need an investment banker or some other finance professional to bring that into
Mhm.
existence. So being part of the secondary market, you really caught in the rhythm of the market in the sense that you kind of your day starts when the market opens, or I should say a bit prior to when it opens, and your day mostly ends, when the market ends, right? And even in the fixed income world, they say fixed income's a 24/7 asset class. Largely speaking, especially in Asia,
Yeah,
our working
FX
hours,
also, right?
yeah,
24/7 is fair to say.
mostly revolves around the time the equity exchange is open. So when the equity exchange is
Mhm.
open, Hong Kong opens around 9, closes around 4. Then our working day largely is going to be around those areas hours as well. So for me
Mhm.
personally, my working day typically starts around 7, maybe slightly earlier, slightly later. And the first thing you'll always do on a working day is you kind of look at overnight changes in the US. Being in the fixed
Mhm.
income world, it's mostly a dollar driven system and a US interest rate driven system. So what
Mhm.
happens in the US is extremely important. So like recently, when there's some important data release that comes out, maybe US CPI, maybe non-farm payroll from the US or unemployment, oftentimes that would have an impact on the valuation of the dollar and US interest rates during those time those data release happened, or if some Fed member said something. And then, but during those hours, at least in Asia where I'm working, we're asleep. So the first thing you
Mhm.
do when you wake up is you kind of look at the notes that your colleagues overnight left you. So oftentimes there'll always be an end of day note from the New York desk that talk about the biggest movements, the research pieces you should be aware of, or
Mhm.
kind of commentary or like whatever price action that was important that you should be aware of. So I'll start my day looking at those, seeing like okay, thinking about well, if the dollar was weak, how that would impact currencies or interest rate in the region. And about 7:40 every morning we have a morning meeting. Even before my previous firm, there was a morning meeting, but the morning meeting was in person. But I think after COVID, most firms probably adopted morning meeting to online on Zoom or
Online.
on those formats. So by 7:40, I'll typically dial into the morning meeting, And sometimes I would speak if I have I release some new research reports, or sometimes if I have views on the currencies I cover. If I think, let's say the Nasdaq had a massive move down like we did recently, well, what would that mean for regional equities, especially Taiwanese or Korean equities? Well, that largely is their tech focus. That the Kospi or the Taiwan index would be down, and what that would mean is most likely that day dollar Taiwan, dollar Korea will be higher. So I would usually read the overnight news at 7, attend the morning meeting by around 7:40, and afterwards get in the office by around 8ish. And I think that's mostly the morning. Then by the time you get to work, you answer some emails, you take some client calls, and by then it's probably around lunch. And after lunch, a bit of the same, depending on what day it is. But then we usually wrap up the day about 6 to 6:30, as the activity in Asia hours really die down after 6, and then it migrates to the London hours. And after 6, I'll let other people worry about it until the next day.
So by the way, Chun is currently based in Hong Kong.
That's generally speaking my day. Obviously, there's some days you will have to work a bit later, especially as a research analyst. If there was a big data print that came out in your area, or there was something big that happened, then you might have to stay a little bit to work on it. But I think the work-life balance in the secondary market, largely speaking, is not too bad, because your hours are mostly dictated by the hours when the market is open, which is mostly speaking 9 to 5-ish.
Yeah, not 9 to 5. You mentioned like started at 7 and finish at 6:30-ish. Slightly worse than that.
A little bit here there,
yeah, but better than 15 hours, I guess. A lot of investment bankers who do IPO or M&A, I guess they can have an even tougher working life, I guess, right? So Chun, can you walk us through your career path and the steps you took to reach your current position? Since we also mentioned you've been working in this area for about 10 years or slightly over 10 years as well. So what brings you here?
So I think for full disclosure, I guess I've been working at a Southside bank, a very Southside bank for close to 7 years. And prior to that, I did about 3 years in public policy area. So my very first job was actually at the Canadian Central Bank. I grew up in Canada, and I was always interested in monetary policy. So my very first job was to be a research assistant at the Bank of Canada. I was still 23, 24 at the time, didn't know much about the world. So, I was making charts for the senior analyst, learning what monetary policy was, learning what credit growth was. And then after about a year in the Bank of Canada, because it was a government bureaucracy, and I wanted to kind of, explore the world and, go live and work in a different place, I actually went to mainland China for about 3 years. And when I was in mainland China, I got very fortunate that I was exposed to an opportunity where I was able to work for a foreign embassy. So I was able to work for the Australian embassy for the treasury section. So I was helping them understand China macro. And then they reported back to Canberra on what it means for Australia, implications for Australian kind of trade policies or public policy. But that role was extremely unique because as working part for a foreign government, I was exposed to a lot of meetings with Chinese government officials. And at that time, 2015 was also a very exciting time for a Chinese, especially fixed income market, because at that time you had the RMB fixing reform, which led to dollar RMB higher at the time. And also at that time, you had the bond market liberalization, where Chinese bonds were being added to a lot of global bond index, being like, for example, Bloomberg Barclays Global Aggregate. That was added around 17-ish. But at that time, the Chinese bond market was being opened up to foreign investors. So at that time, I attended a lot of sell-side events. I talked to a lot of people such as myself now, try to understand how interest rate markets worked in China, how FX markets worked in China. And after about doing that for 2 years, I wanted to get a real job in finance and
a real job,
like where you actually get the nitty-gritty details of how you trade, when you talk to investors, how people think about it. So I applied for some roles, and then just online, and then Morgan Stanley interviewed me. And I think what stood out from my interview process compared to potentially other candidates was that because I attended those bond market events in China, and I largely understood, what's the discussion about the RMB reform, RMB internationalization in general, and also interest rate liberalization in China. I think the Morgan Stanley really valued that. and then they hired me.
Mm.
And from there, I worked for 3 years at Morgan Stanley, and then I moved to my current firm.
Yeah, and when you were working for Morgan Stanley, you were with global markets as well, right?
Yeah, I did the exact same role that I
Same
do
thing.
now. It was in research. Yeah, so I was helping kind of affect both external and internal stakeholders understand the fixed income market in Asia.
Oh.
Yeah, that's something I continue to do to this day.
Yeah, that's really cool. And just out of curiosity, since my background is wealth management, private banking, or asset management, so when it comes to investment banking, I also have some confusion. For example, the first thing that come to my mind, when it comes to investment bankings are IPOs and M&A. So can you explain a little bit of the structure of an investment bank and what roles are available for young professionals to explore? You mentioned you work for global markets, but there are other, functions of an investment bank. Would you be able to explain a little bit more about this?
Okay, so this is a pretty broad topic, and so the side of the market I'm most exposed to, as I mentioned, is the secondary market, specifically in fixed income and specifically in Asia. So what I know is just a tiny slice of how the entire different large multinational banks operate, but largely speaking, every bank have public and private side, and actually by regulation, it's actually not that easy to communicate across the wall. So if you work in the private side, you'll often be privy to inside info because you know about companies that would IPO, come online, and you have to effectively sign the NDA saying that you won't tell people. You're definitely not going to tell people like me who work on the public side, who write research reports and tell people to buy this and sell that. So that is mostly the most people talk about investment banking is tied to the primary market where they're trying to bring private securities that are not traded onto an exchange, and then it is traded. And through that process, you do a lot of due diligence, you do a lot of regulation work, you do valuation. So that is a part of the world that I'm not actually myself that exposed to, and a bit of it is because of regulation. Like it's not easy for me to go talk to an investment banker. There's actually a lot of rules for me to officially talk to people on the private side. But on the secondary market side, broadly speaking, I can say there's equity desks and there's fixed income desks. And equity desks, as the name implies, they do trading of equities. It could be cash equities, it could be futures, it could be derivatives like total return swaps. That itself is also a very big part of the bank, and different banks have their different size fixed income versus equity department. I would say in Hong Kong in general, the equity departments tend to be slightly bigger because Hong Kong at the end of the day, with the exchange and A share, H shares, and all that, it tends to be a bit more equity focused. But if we look at the other financial center in the region, let's say Singapore will be very much more fixed income focused because the Southeast Asian market is much smaller than, let's say, the North Asia equity markets of, let's say, Taiwan, Korea, China, Hong Kong. So fixed income part where I work, I think broadly speaking, there are a few type of roles. In general, I would say there are traders, there are salespeople, and then there's research people. Like
research. Okay.
Traders in a fixed income context is very important because if you work at a bank, your primary job is to be a market maker. Your primary job officially is not to per se, find directional views where you kind of place bets on like the dollar's going to go up or down. Inevitably, that would happen, but usually, if you're working at a bank, you're a market maker. What that means is the way a sell side bank works in let's say in the FX desk is similar to a casino in the sense that they're called a dealer for a reason. Is because if you want to buy dollars against, let's say, like RMB, someone has to sell you that position, right? Especially if you do it on a derivative basis where you don't settle immediately. Effectively, to buy dollar CNY forward, you need someone to sell you dollar CNY forward, and effectively the banks take the other side of that trade, right? And then how the bank makes money is because a bank has a very broad franchise. Because you bought dollar CNY forward, they know some exporter out there or some dollar earnings that needs to convert it back to CNY, needs to sell dollar forward. And by bridging those flows in the market, effectively you're charging a spread and you're making money. So the job of the trader is to make prices for the clients. So if the clients come to you and say, okay, I want you to tell me what is the price of dollar CNY in 3 months' time. So that we call that dollar CNY 3-month outright. Then the trader will have to post both the price he's willing to buy at and the price he's willing to sell at. And the ability for this trader to manage these flows and also, I guess, to offload the risk would determine how successful at least a fixed income currency trader would be. Where the second role, that largely speaking, I would say, is the salespeople. So the salespeople, their job is not per se like the trader where they make market. The salespeople is to bring flow to the market. As I mentioned to you earlier, a bank's ability often to make money is that they have a very broad client base. The best situation is a buyer for every seller. If I know that you have to buy Swiss franc and I know someone else is willing to sell Swiss franc and I can intermediate that process, then I can spread. And the salespeople's main job effectively is to sell financial products to the client base. And there are many different types of clients, so you have many different types of sales. So at a big dealer platform, like Morgan Stanley or JPMorgan, typical clients will include like insurance companies, pension funds, hedge funds, corporates, equity funds, and all these funds often have different needs. Just because everyone is buying dollars, you might know a type of client that's always selling dollars. So, for example, in Asia, like the type of clients that always sell dollars will be exporters, because Asian economies are net exporting economies, especially true for Taiwan, mainland China, those types. So those clients will always have often a lot of dollars to sell. But then you need to know who to match it with the buyers. So if you know, these Korean importers need to buy dollars while these exporters need to sell dollars, I'll just bridge them and charge the gap. So as a salesperson, your job is not per se to bridge them directly. Your job is actually just to bring all the flow you can to the bank. And when you bring the flow to the bank, then it's the trader's job to move the prices so that they could bridge them and effectively make money for the bank. And then the last role I'll talk about is my own role.
Research.
The research strategy role. I think my role is quite unique in the sense that, because I often sit with the sales and trading people, you often get absorbed into the flow of the market. You hear the noise, you know what people are saying. But then I guess the benefit of my job is I don't have the immediate execution demands the sales or the traders have. So I can actually take some time to sit back and think about what this means, right? What does this mean for the direction of the dollar in the region or interest rates in the region? Will central banks cut rates? Will they hold rates? Will they increase interest rates? Whatever that may be. And oftentimes I express my views through writing research reports. I'll write a research reports that I think, right now the NASDAQ is selling off very aggressively. We see very strong health from, Taiwanese equities. So I think, dollar Taiwan will be higher, next month, right? And then the salespeople, as a part of the value added process, will bring my research to the clients. And then, and then clients, they will talk to me, see my views, and, they could agree or disagree, right? Like everyone has a different view, right? That's fine. But at least maybe through my analysis, through the data I collected, through the different people I talk to, I can bring them a perspective and that they're more comfortable making a position than had they not talked to me. So I think my main value add is really to digest the information that's out there and try to present to clients in a succinct way that they feel comfortable using our brokerage and they feel comfortable dealing with our bank, because they know that when they deal with our bank, that at least you're dealing with some people that are well informed in the market, right? We're not always right, but at least we do our homework.
Yeah.
More right than wrong over time. Yeah. So I guess. So to recap, and then there's more technical roles that like the structuring team that if you want particular products, they can structure it for you. But I personally don't deal with that side of the business very much, so I'm not going to speak too much on that part.
Okay, thank you so much. I think before you share all this, actually, even me myself, I was very confused, especially regarding the global market, secondary market within an investment bank. Yeah, you basically really clear, now I really have a clear structure or clear mind regarding this. So before we move on to the next question, Chun, are you able to move a little bit in the center of the camera?
Okay.
Yeah, now it's better. Okay. Cool. Okay. Great. So yeah, now it's a lot better. So my next question is, if you could choose again, would you still choose to be let's say research analyst or working in an investment bank? So why or why not? Would you be able to share a bit of your journey as well?
Yeah, I think I don't regret my career choices. So I think, as I was mentioning earlier, one thing I really appreciate about my role is because I get to speak to a lot of different people in
Mm-hmm.
specifically the fixed income market in Asia. So one, I guess, the benefits of that is you get a very strong diversity of views, and because I often sit with the sales and the traders, you really feel the pulse of the market. You really feel like on a day when something big happens, you kind of you're actually at least kind of almost in the heart of it. You can feel the energy of the people. You can really hear what's the flow going on, what people's views are, what they want to do. And it's a really good way to learn about how the market works. I think one thing that's very different in the fixed income world than the equity world. The equity world, largely speaking, all the activity revolves around the exchange. There's very transparent price. Everybody knows what the price is. Everybody knows what the volume is that day. But in the fixed income world, it's still mostly an over-the-counter world where the price is formulated by the dealers. As like the guy sitting next to me that's making the market for some currency pairs, he is the one determining the price, right? Obviously, there's other dealers out there, but oftentimes, what is the price? It's just the median price that all these dealers are posting. And when you're sitting next to someone like that and really talk to them about how they feel about the market, what kind of flow do you see, you really feel you're involved in the market and you get a really interesting perspective on what's happening that I think if you're not at a large platform, you may not be exposed to. So I think that kind of learning process, and I get to learn a lot about the derivative products, how different clients express different views on the same thing. For me personally, I think working at a big sell side platform really taught me a lot of those products and just understanding flow. And that I definitely enjoy, and I still enjoy to this day. And I think a second part of my job that's I find very rewarding is that I get paid to travel to many places in the world to see clients,
Nice.
understand what are their needs. Do they want to understand my markets better? How can we better serve them? Are there research reports they're interested in, topics they're interested in? So I think just being able to have that professional reach and talk to the big players in the market in their own individual currencies or interest rate pairs, I think it's a very unique opportunity. That
When is your next time to Switzerland, by the way?
Oh, that's up and coming. Maybe London first.
Maybe London first.
Yeah,
Okay.
London first.
Good to know.
But yeah, I do go to Europe or US once in a while. Obviously, there's cost considerations, but I travel in the region quite often to Singapore, Korea, Taiwan, mainland China pretty often, and occasionally to London and Europe as well. So sorry, London and New York as well. So I think that part of the job, and it's not only the traveling; it's actually you go meet people who are dealing in these markets, who have substantial capital that they manage, and just sometimes knowing that I can help them in the investment process. That itself is being an interesting position to be in.
That's great. And now let's move on to the next topic about how to join an investment bank. I think, Chun, you already mentioned share a lot about your role and then different roles that are available within an investment bank. I think our audience today, we have a lot of young professionals or those even students who are still studying at university. So I wanted to ask if for those people who are aspiring to join an investment bank later on, what are some key factors to consider when deciding to join an investment bank or overall the investment banking sector? Do you have any advice for those people?
I think key factors to consider is kind of understanding your asset class. For example, like I joined fixed income and interest rate research, and because I knew like my first job was at Bank of Canada that was dealing with interest rates, and I knew even prior to that, I was always interested in the macro economy. I kind of grew up during the time of the financial crisis, and I was reading the newspaper back then about what are bailouts, what's cutting interest rate, what are quantitative easing. Like these were all topics that really interested me. So like I just started digging a little bit and learning about them. And then I realized, oh, okay, this is all macro related, and these are very tied to the fixed income market. So I think if there's someone that is still in school or just starting out, it's really to understand the asset class that you're interested in. For example, if you're interested in tech stocks, then maybe you should not join the fixed income desk, right? You should join the equity desk. Maybe you should be the dealer for Taiwanese equities that specialize in tech stocks, or be the research analyst for that area. So, or if you're very passionate about, let's say, commodities, or passionate about, natural gas, then maybe you should join the commodity desk. So I think it's really to know what appeals to you, and not every asset class appeals to everybody. For example, like I personally don't find, I know we both took CFA, but I personally don't find fundamental analysis on equities to be that interesting for me. So hence,
Okay.
that's why I'm not that part of the market. But other people will. So I feel like it's really important just to know what appeals to you, and once you find that what appeals to you, then you just keep digging deeper. Because when you do go for those interviews, that type of knowledge will show up. So I was mentioning earlier before, like when I was still working for the public sector with the Australian government, I went to a lot of bond market conferences and learned how the Chinese interest rate market worked. And when I was interviewing, I was able to use a lot of the frameworks and terminology that they talked about. And every market has its own lingual. Every market has its own kind of language, and the words people use. And if you can speak the same language as the people in that segment of the market, that would show, and then people will notice.
Yeah, that's really, really true. Yeah. Especially when you are in a really specific area like fixed income. I guess, a lot of things like you mentioned CFA, which is make me quite interested as well to ask, for fixed income. I remember it was so it was the most confusing, I would say, subject among all of those asset classes. I mean, for me personally, different durations, like all those kind of terminologies, just reminds me of those old times. And Chun, another question for you is like you mentioned, yeah, first of all, really
Yeah, no,
understand
it's
the
it's
asset
you're not
class.
alone.
Really understand the asset classes that you're interested in. I guess for a lot of people or fresh young graduates or young professionals, in order to make themselves really stand out, in this competition, if one really, really wants to join investment bank, and then how competitive the market is. So would you be able to give us some advice, or how can we stand out when applying for roles in investment banking, if we want to be a bit, generic or general, let's say,
Well, I
apart
would
from
say
really know your domain?
Well, I say definitely you got to be a bit proactive. Try often investment banks if you're situated at where the hub is. For example, Hong Kong is a hub. Definitely London is a hub. New York is definitely a hub. Uh, Paris is a hub to some extent these days. If you're one of these hubs, definitely as much as possible attend their networking events. Because at the networking events, not only will you have the HR people that would manage the first kind of round of screenings, but then you'll also have, they would bring people like such as myself who work in the area already to talk to these students about what we do every day. And I do think the few times I've attended these events, the people that, kind of, as I mentioned, like that can speak the language, I would say, of certain asset class, those people definitely stand out. And then you kind of keep them in mind, and especially if you see the resume again, then you might try to give them an interview. So I think definitely, even though nowadays everything's online, we can connect virtually like we are today. I personally think that nothing beats face-to-face connection, and just to shake that hand, just to talk to people, have that coffee, because I think those things still matters, especially if you're physically able to do it. If you live in one of the major financial centers that are hiring for analysts, and every year there's always a big American banks and big European banks, a class of analysts that they hire. So I think definitely, yeah, attend as much of those events as possible. And I will also say, when I was, in third, fourth year of university, I just try to talk to as many people as possible, because I think at that time, at first, it might be hard to really figure out, oh yes, I want to learn about Asia fixed income, or I want to learn about tech equities. You might not realize what you like yet. So that's why just talking to as many people as possible, understanding what they do day to day, and does that appeal to you? And I find for me oftentimes that in these networkings, it's a very skewed outcome, in the sense that maybe like 95% of the time you talk to someone, nothing comes about from it. But you just need that 1 out of 20 times, that one person, when you talk
Oh,
to them,
I
they're
totally
actually,
agree with that. Yeah.
or they actually tell you something critical that was very important in an interview or conversation later on. So I think for me, it's always been about just talking to many people as I can, and just learning about how the ecosystem works. because I think if you expose yourself to those positive tail risks, those positive skewed risks, over time they'll pay off. Not every time, but over time you do it enough, I find that it's oftentimes it works in your favor. So I would say, yeah, for young people, definitely be at the hubs, right? Be it Hong Kong, Singapore, London, Paris, or New York. Um, Otherwise, just meet as many people and talk to as many people in industry as you can to really figure out which stream that you want to go to.
Yeah, I totally agree with you. So at the end of the day, I feel it's also like a number game, right? Like out of 10, probably 1 or 2 persons are really, like really can be really helpful. And even one sentence that what they said, the information that they give can be really helpful as well. But you never know without attending those events, without being proactive. You may think, oh, this is useless. That person is useless. This conversation is useless. But at the end of the day, I would say it's really a number game as well. So yeah, thank you so much, Chun, for explaining it. So now my next question is apart from networking, apart from being proactive, apart from knowing your domain, like what you just mentioned. So do you like, for example, we also mentioned you are a CFA charterholder, I'm a CFA charterholder. So what skills or qualifications are essential for someone looking to enter the field of investment banking, for example? And just out of curiosity, since you mentioned you are a CFA charterholder, does it really help your career at all?
Well, okay, I think in terms of skills and qualification,
Yeah.
it depends on which role you're applying for. But I think most roles, I would say in general, communication skills is very important. And it depends on which part of the market you work for. Because I've only so far in my career worked for on the sell side. So I work for banks, platforms, dealers. I haven't worked for buy side yet, but I interact with a lot of buy side people. So like I have some idea of what they do. But I think pretty much on either side, your ability to explain clearly what you're thinking and why people should listen to you is a very important skill. Because at the end of the day, despite all the technologies we have, despite all these fancy tools, most of the time it comes down to the decision of some guy who has the power to press the button or make a decision. Will they do that? Right? As according to what you say. And if you cannot explain yourself clearly in a articulate manner, whatever asset class or side of the market you are, then your ability to be successful is going to be limited. Even as a trader, you have a boss, right? And oftentimes your boss will set the risk limit. And if you cannot articulate to him or her clearly why you think we need to hold on to this losing position or we need to add further risk to this positions, then it's going to hamper your ability to be successful. So I think the first and foremost ability I would say is clear communication skills and really understand what you want to say. And it took me some time to realize this because you have to understand a lot about the market, you have to understand the fundamentals, you have to understand the flow. But once you kind of put all those together, learning how to package it in a way that other people can digest it. I think that is a communication skill, is definitely underrated in the industry. I'll say that's the first. Secondly, I think one thing that has changed a bit since at least 7 years that I've been in the sell side is the necessity to learn programming. Nowadays, when I see the interns, either may it be from the trading side, maybe from the sales side, or maybe from even research, pretty much everybody has some form of programming skills. And
Really?
most likely
Wow.
Python, because that's the language most people learn in school these days. And I think because Python has a very strong ecosystem of different libraries and tools to use, that's the ecosystem of Python is very strong in finance. And this is even more true, I think, on the buy side, on hedge funds and real money, kind of like mutual funds. The ability to process a lot of data is also part of the communication skills. We now live in a world of data. You can buy data that is very fancy. There's a lot of machine learning algorithms that can do a lot of fancy analysis for you. So being able to use those fancy tools and then being able to explain it in a human way, I think that is a very important skill for the industry. But to be able to do that, you need to know both the technical knowledge of working in the programming language and the package and the libraries, and then afterwards taking that technical solution and explain it in a human way to stakeholders. So I say communication and also, I guess, programming or ability to process data is increasingly important. Those are the two, I think, skills I will highlight. In terms of the CFA designation, I think,
or
you and I met.
CPA, whatever it is, there are so many qualifications that are available for finance professionals, right?
Yeah, so I can't speak to the other certificates because I never took them, but I did, take the CFA, and I just paid my annual fee as well. So I think I have a
I
little
just
bit
paid
of
400
ability
something as well, right?
to comment on this matter. I think it's definitely useful as a foundational knowledge. As you mentioned earlier, I think CFA was very broad, and it taught me a lot of concepts that I wasn't aware of, like active management in the equities world, or like wealth management, and some of the derivatives that I may not encounter every day. So I think as a exposure for knowledge, I thought it was pretty useful. But I think for me specifically, because I obtained the CFA after 3 years in the industry already. I was already working at Morgan Stanley. So I think for me personally, it hasn't really at least got me a new job, right? I think there are benefits to being a CFA Charterholder. You can attend their events. There's some volunteering events that you can also attend. You can do some networking. So I'm not discounting those opportunities, but at least for me personally, it hasn't really, changed my working situation, because I think by the time I got the past the level 3 and got the Charterholder, I was already I already had my foot in the industry. But for someone who may not have their foot in the industry, or someone who may not take a finance undergrad and doesn't know what Black
Like
Scholes
me.
is, then I think it could be very useful. But I think I would take it more from it's a knowledge perspective than thinking it as a ticket to getting employment somewhere.
Yeah, I could totally relate as well, Chun. And now let's talk about the future of investment banking careers. I would say whenever it comes to investment banking, people see it as a really glamorous job. Oh, Chun, you work in an investment bank, blah blah blah. So I wanted to ask you also, do you think over the past few years, working at an investment bank has lost some of its glamour? Or would you advise young people to join an investment bank? Like today versus probably 5 years ago or 10 years ago, let's say.
Well, I think the market has cycles. So I personally never thought people should join for the glamour, because I don't think that's very sustainable. And for example, right now, if you look at, let's say, at least the Asia part of the world, that I'm currently living in, the IPO volumes are very low in Hong Kong. And if you read a lot of the headlines, a lot of the primary market investment bankers have been laid off from many different banks. So this is definitely going through a cycle, because you think back in 2021, that was very hot, and those people did very well, and made a lot of money.
Big
But now
bonus.
less so. So I think
Yeah.
if you just join for the glamour, it's going to be hard to survive the cycle, because you're going to see, wow, bonus might be 0 this year. You're lucky to even have a job. But yeah, maybe you'll pick up next year, but you don't know. But if you don't have, I think, certain passion or curiosity,
A
or
long-term mindset, right?
it's hard to stay committed to your job and to what you're doing. So I think people should, this is true for any job, but I think especially in finance, you should do it if you think you find it interesting and you see a future in it. And you should not chase the immediate dollar, because that dollar can disappear very fast. Today the Nikkei dropped 10%, right?
I know. It's the first news that I saw after I woke up.
Things are very volatile. So you don't know by
Yeah.
the time you position yourself thinking, oh, this is the moneymaker. By the time you actually get in the industry, that might no longer be true. So I think, but if, let's say, you're very always interested in commodities, right? You're always interested in the pricing of oil, natural gas, and those commodities will be around for quite some time. Then even during the good times or bad times, like, you will still be around. And obviously, it's more rewarding to be in the industry during the good times. The bonus is bigger. There's more budget for everything. And during the bad times, all that gets cut. But at least at the end of the day, when you go to work, you show up, you still find it interesting enough to keep you going. So I think that's what I would say to people. But in terms of relative to the past, I would say at least there are two major trends that I've noticed that are making it, I think, people should think carefully if that they do want to pursue a career in a in a big investment bank. The first major trend is that over time, headcount is coming down. And a lot of this is due to automation. And some of it because of AI, that machines can now do the job that people used to do. Now a lot of FX trading, the part that I'm most familiar with, has been migrated to e-platforms where you don't even need a human trader to price it for you anymore. A machine will price it, and there'll be a human that just overlooks things. So you can think about before they will hire maybe like 10 spot traders. Now there'll be maybe 2 spot traders left. And this is true for across a number of roles. So there's definitely a trend where headcount is at best stagnating or over time declining. So if people join investment banks, that's the reality that I think they should be first aware of. And second reality, and this is where I guess I'm biased from my position, is that the cost of capital, especially for American banks, over time has gone up. And what that means is that effectively, because of regulation, the amount of business and risk that an American bank can take is reduced over time. And being at a bank, your ability to generate profit and make money is your ability to take risk, often to make position for clients or have inventory for clients or have products you can sell. But because of regulation, that has changed. And that means in aggregate, the amount of risk a bank can take is reduced. And that means every business line, they will be selling less to clients. And if you're selling less to clients, then the pool money for everyone declines. So that is there's ups and downs. I mean, but the upside is that it might make the bank more safe. So we're less likely to face like a 08 type of crisis where maybe certain banks, like if you think about Silicon Valley Bank last year, they failed, right? And all the people who worked there would have, they got merged.
UBS, Credit Suisse, right? All these.
Like a lot of people probably lost their job, right? So you have to think about there's like these are structural trends that are relevant. That I think that when people make a career kind of move, they should think about. So number one is declining headcount, and number two, cost of capital going up, and which on average means a little bit harder to do business. So that would impact obviously bonus.
Impact on the revenue, profit, and then at the end of the day, your bonus as an investment banker or what role you play.
Exactly. But given those difficulties, if people are still interested, I would still highly encourage them to do it. Because at the end of the day, I think if you're interested in finance, even though let's say you want to go to a buy side in the future, you want to work for a real money account, you want to work for a hedge fund, it's still, I think the sell side training is very good because you will start off your career at the heart of where the flow is. So you really understand both like many different players in the market. You understand who are the big buyers, you understand who are the big sellers, and you understand the psychology. Like today, why did the Nikkei fall 10%? What kind of flow and factors will lead to a big deleveraging move like that? I do think working at a sell-side bank does give you a unique perspective. And if those are the type of issues that products and trends you want to follow and deal with, then even despite the difficulties I mentioned, I still think it's quite worthwhile to join an investment bank.
Yeah, Chun, you also mentioned the first point you mentioned is automation, right? It makes the roles that are available actually smaller than before. So I was just out of curiosity, what role does technology play into your day-to-day work, for example, as a research analyst? And how has it changed over the years? Like, for example, now AI is a really hot topic, but I mean, overall, technology has been playing a huge part of finance as well. So I just, wanted to know, how has AI or overall technology changed the way you work?
I think for me personally, it has changed a bit less. It's because many banks are still pretty cautious when it comes to AI, because a lot of banks, they don't want you to hand over your data. Like when I say you, I mean the employee, to hand over proprietary data that your bank has to, let's say, like OpenAI, which runs ChatGPT. So I think a lot of banks are still developing the risk policy. So I think at least at large banks, it's been quite slow in terms of how it is changing our day-to-day work. But I think at smaller platforms, like if you work at a hedge fund, you work at a smaller shop where they're more flexible with these policies, I definitely think that AI is changing the way people are processing information. And I guess one of the small ways it's changing at least my role is because I have to look at different markets in the region, and one of the markets I cover is Korea. And the biggest way it has helped me a lot is actually just translating material from the internet. And you can say, oh, this pretty much is just Google Translate, but you have to understand the quality of the translation has improved immensely. And that's actually impacted my world quite a lot, because effectively now I have access to Korean language information at a very high quality that I wouldn't have had before. Like 10 years ago, Google Translate existed, but the translation wasn't that good. You can't really understand what they're really trying to say, or they mistranslate, or you get the wrong idea. But now when I use Google Translate to translate some Korean document, I get a pretty strong idea about what they say, and I add on my own finance knowledge. I can piece together what the regulators are trying to say, what these different site reports are trying to say, or let's say the Bank of Korea is trying to say. And I think that really helps because it narrows the information advantage, let's say, a Korean speaker would have. 10 years ago, I couldn't read the document, and pretty much I'm out of the game, right? I'm done. I can't even have a view on the topic. But now, because of these AI tools, and increasingly the improving quality of these AI tools, I'm able to exactly at least have an opinion on the matter. And this is true not just for me, it's true across the street on both buy side and sell side. So I do think that AI is helping us process information in a more powerful way, and allow us to understand insights that we couldn't have before. And as a research analyst, that's super useful, because I would actually joke with my colleagues. I'm like, having GPT effectively is like having 2 first-year analysts work for me. Like the efficiency is maybe sometimes even better than 2 first-year analysts. Obviously, there's still stuff a human can do that the AI tools cannot. And I think it's very important to understand the limitations of these AI tools, because one of the benefits, at least having been in the market for a little bit, at least in my narrow subdomain, I know when ChatGPT is wrong, because I know the answer to these questions. But oftentimes, these AI tools, because of inference and the way they're designed, they will just come up to a most likely answer. And sometimes in the world of finance, you have to be very specific. Buying and selling are 2 very different things. And if you don't understand that transaction is buying or selling, then using these AI tools can actually be harmful for you.
Yeah, I totally agree with you. I would say, Adi, you cannot afford to not use it or not know it. And then in the meantime, you also need to know the limitation as well. Chun, personally, today I learned really a lot from you as well. So just one last question before I let you go. So now, as we know, our audience are mainly young professionals or those final year students, I would say. So if I ask you to give just one last piece of advice, so what advice would you give to someone aspiring to join a major financial institutions, like where you work now or previously at Morgan Stanley? So where you used to work, what will be the one piece of advice that you give to our audience today?
I think I don't want, at the risk of repeating myself, I think like everything in life, especially in the finance world, just take a little bit of risk and reach out. It's like today, like you and I, we reconnected because you saw my photo participating in a sports event, right? Like completely unrelated to finance, and you just reached out, asked me, like, "Oh, do you want to be part of my podcast?" So I think this is true for anything in life. Just ask. Like you guys can try to reach out to me if you want, and at worst, they'll just not give you a response, right? Even if they say no, hey, like you just move on. So I think in finance, especially when you're first starting out, just take that, try and reach out on LinkedIn, reach out on email, whatever medium you use. And I think most people would be surprised. At least I was surprised. Like more people helped me than I thought. That's for sure. So, and you have to think about at the end, like you lose nothing, right? If they don't respond, they don't respond. That's fine. But I think sometimes all you need is that one person to respond. So if there's only like any parting advice I can give is just take that little bit of risk, believe in yourself, and just reach out.
Yeah. Be proactive. Just ask. Thank you so much, Chun, today and I really hope our audience will learn a lot as well from you. So I will see you next time. See you soon.
Yeah, great. Thanks a lot.
Thank you.
Bye.